Colleagues, there is no doubt that the 1994 government inherited an economy in crisis. The economy had been shaped by apartheid policies, which thrived through exclusion of the black majority of our country. The apartheid state deliberately excluded blacks from opportunities in the labor market and the direct ownership of business and the land ownership. It limited investment in infrastructure and service delivery in black communities. And as such, blacks live in poverty. The large white-dominated conglomerates control large parts of our commerce and industry. Many of those white male-dominated conglomerates are still thriving even today. The post-apartheid government enacted laws to address the legacy of apartheid and promote the economic participation of black people in South Africa. One of those laws is the broad-based black economic empowerment. The BEE or the BBBEE encourages business to integrate black people in the workspace, upskill and mentor and support black businesses, and give back to mainly poor communities across the country, which remain poor due to the land dispossessions, and the majority of these communities are black South Africans. But what are the reports saying about the implementation of BBBEE? What role can South African development finance institutions play in ensuring transformation in the country? Today's webinar is looking at economic transformation with specific focus to BBBEE and the development finance institutions in our country. Welcome to this session. My name is Sediko Rakolote, the founder and the trustee of Progressive Socio-Economic Investment Institute Trust. I'm facilitating this session in my capacity as the trustee and not representing the views of any other company that I might be linked to. Our panelists today are having wealth of experience around BBBEE and the development finance institutions in South Africa. The first panelist to give us an overview on the BBBEE 2019-20 report is the BBBEE Commissioner, Ms Zodwa Ntuli, and the second panelist to speak about Development Finance Institute is the lecturer at the University of Stellenbosch and also serving as the Deputy Chairperson of the Commission for Gender Equality. It's going to be a very interactive session. I encourage colleagues who are on Facebook, please post questions. And those who are joining us in this webinar also feel free to ask questions. Our webinars are very much interactive, I'm repeating. Please feel free to ask questions also when you're in Facebook. I'll hand over to our first panelist, Ms Zodwa Ntuli, who's coming from the BBBEE Commission, to give us an overview of the 2019-2020 BBBEE report. Welcome, Ntuli. We really appreciate having you here. We are humbled to have you participating here. And we hand over to you to present the overview on 2019-2020 BBBEE report.
Can you hear me?
Yes, we can hear you.
Okay, all right. Thanks again for inviting us to participate in this webinar. We always see this as an opportunity to raise awareness and also to educate on the requirements of the BBBEE Act. And particularly because in this country, when we speak about BBBEE, we normally speak across each other. And sometimes we assume that we are all on the same page. But I hope that today's presentation that I will do for this session will also be able to help us to understand at least the BBBEE requirements, why we're doing it, and what do we hope to achieve and where we are as a country. I did send the presentation, but I think it was transmitted a little bit late, but you don't have to worry about projecting it, but feel free to circulate it to all of your participants. So there's absolutely nothing confidential in my presentation. I'm a public servant and the organization is a public entity. So every information that we have, we've got to share as transparently as possible. All right then, let me just firstly explain what the BBBEE Commission is and what we do. And then you will then be in a position to understand the context of the reports that I will summarize for you today. The BBBEE Commission is a regulatory body that was established in 2016 to oversee the implementation of the BBBEE Act in the country. You'll recall that in 2003, South Africa passed the broad, at the time it was just Black Economic Empowerment Act of 2003. And in that act, it provided a framework to facilitate the participation of Black people in the economy of this country. And that was obviously in realization, which is also entrenched in our constitution, that BBBEE is, facilitator, I cannot see if I am projecting. Can you just confirm for me?
No, you are not projecting.
But can you hear me? Can you see me?
Yeah, we can hear you. We can hear you very loud and clear. We can see you.
Okay, no, thank you very much. It's just that my screen is showing me something different. Okay, yeah, right. So now, as we're saying that the whole purpose of the BBBEE Act was to facilitate the inclusion of the people that were previously excluded from the economy in the economy of South Africa. However, from 2003 to around 2013, there wasn't any monitoring of that. And as a result, a whole lot of practices that were undesirable came up and cropped into the industry. And as a result, we could not achieve what this legislation was intended to do. So in 2013, the legislation was amended to create the BBBEE Commission as a regulator to oversee the implementation, which means that our role and mandate is to oversee the overall implementation of BBBEE in the country. And we do that through education and awareness. We do that through education sessions, but also we provide free advice to all of the entities, big and small, and all ordinary people who want guidance on BBBEE. But also we have a mandate to investigate complaints that are filed with us. Mostly these are complaints relating to people that are fronted or that are misrepresented in the BBBEE initiatives. Sometimes they are passed as owners of entities when they are not. Sometimes they are also placed on boards and decision-making structures of companies, but as tokens without any real decision-making. So those are the types of complaints that we would investigate and would make our decisions around them. And where there is wrongdoing, then we've got options to send and refer the matter to the SAPS for a further investigations from a criminal perspective, or we can also send it to the National Prosecution Authority for them to prosecute the involved entities on the basis of fronting or misrepresentation of BBBEE status. So those are the two outcomes that could come out of an investigation. And we are also mandated now in terms of the Act to, while we monitor, we must prepare reports that are going to give the country information on how we are doing based on where we were and on a yearly basis, how are companies doing and in terms of reflecting the demographics of the country. So we do that under Section 13G, which is a requirement, a mandate that requires all the measured entities like the JSE listed companies, all organs of state, all public entities. They are required to submit what we call BBBEE compliance reports on an annual basis, which indicate how they are doing on implementing BBBEE. And I will share with you the summary of the findings of that report for 2019 so that you can then be on the same page there. The second part of the reporting obligation that we have is in relation to the requirement for the Commission to maintain a register of all major BBBEE transactions. By major BBBEE transactions, what we mean is any ownership deal that gives a stake to a Black person and is classified as Black ownership. That deal, if it has a transaction value of 25 million, it must be registered with the Commission. Once it is registered with us, we are required to assess it as an individual transaction and be able to give feedback to the parties in terms of whether that transaction complies with the requirements of the Act or not. So through this process, we are able to pick up the transactions that have got fronting tendencies or transactions that have got severe restrictions on the Black ownership. And I will share with you again that part when I give you the summary of the Measure B transactions. So our mandate stretches over a whole lot of things. We are also required to cooperate with other regulators, with other entities and so forth. But today's session is going to only focus on the two aspects of our mandate, which is Section 13G of the compliance reports, which help us to then gauge how the country is doing on BBBEE. And then the second aspect that I'm going to share with you is the outcomes of the Measure B transactions that have been analyzed, which were submitted to us in the previous year. And we've analyzed that, and we can give you a sense of what is happening in this country. So those are the two areas. Now, let me start by sharing firstly, the Stats SA information regarding our population estimates. So in terms of our population estimates, African people account for 80% of the population. So it's 80.7%. Colored people are at 8.8%. Indian people are at 2.6%. And white people are at 7.9%. So I'm giving you these population estimates so that you can then reflect when I give you the status in terms of how we're doing on transformation, then you can be able to measure it against the population estimates, but as well as the economically active population of this country. So Stats SA further gave us the economically active population statistics. And remember, these are people that are either unemployed or actively looking for a job, and those are between 16 and 64 in terms of age. And in terms of the EAP of South Africa, according to Stats SA, African people account for 78.9% of the economically active population. And colored people, it's 9.7%. And Indian people is 2.7%. And then white people only account for 8.7%. So now if you look at these two statistics in terms of population estimates, as well as the economically active population, you'll see that Black people in their generic categorization, which basically means African people, colored people, and Indian people, they account for over 80% of the population and of the economically active population. So now, when I give you the statistics around how we're doing on BBBEE, you need to always measure it against this so that you can see whether we are progressing or not. And the statistics will give you an indication of that. So now I'm going to start now with the Section 13G requirements. So every year, we receive those reports from the entities and we analyze them and we provide the consolidated status of how we're doing. So now in terms of the latest report that we had as the Commission, we have received, I'm going to start with the transactions first. Let me start with the transactions and then I will then end with the overall national status. So in terms of the transactions, as I've indicated, every transaction that is entered into and it is recognized or for purpose of recognition as Black ownership, for purpose of recognizing points and improving the status of the entity that is entering into that transaction, must be notified to the Commission within 15 days of conclusion. When we receive it, we analyze it, and then we'll give feedback to the parties on compliance. So in the last year, the last financial year, we received 95 transactions. And these transactions account for about 112 billion in terms of transaction value. And when we assess these transactions, we actually found that if it is true in terms of what is written in the documents, then these transactions are going to give the Black people that are involved in them, they are going to actually get 60% in terms of ownership of those entities that they are involved in. So on average, it is going to be 60%. However, what we picked up is that the manner in which these transactions are structured, what is written as the percentage of ownership that is given to Black people does not correspond with their powers in terms of voting rights. So we found that of the 60% Black ownership that is expected from these transactions, the documents are telling us that these people only have half of the voting rights, meaning that of the 60% Black ownership, which is supposed to give a significant power, we find that Black people only have around 32% of the voting rights. So that is a concern, which means that although Black people seemingly are being empowered, but on the other hand, they are being stripped of the powers to make decisions in those entities. This is a concern that we've raised when we assess the transactions individually, and we've given feedback to those entities to adjust the voting rights to correspond with the percentage of ownership that is given. And most of them have started to align. Most of them have are in the process of aligning, and we are assisting them. Some have already aligned, and we've given them the letters to confirm that their transaction is in order. And once we've done that, we monitor the transaction to ensure that on implementation, the parties do not change it and still make a Black person just a token in the BEE arrangement. So that is basically largely our responsibility to make sure that in as much as we deal with fronting practices that have already happened, we also prevent these fronting practices from taking place going forward. And we find that in some instances, when we indicate to the companies that the transaction is unaligned, some of the entities want to argue extensively. While you are arguing, when we say the transaction is not aligned, while you are arguing, we give you a time period within which to align. Once that time period has passed, we issue with a letter that indicates that that particular Black ownership, you cannot recognize it in your scorecard. And if we can find that you've recognized it in your scorecard, that is misrepresentation of your BBBEE status, because that's not real ownership. So now, out of the 95 transactions, as I've indicated, you will see later when you go through the presentation that the transactions, the 112 billion is really coming from the ICT sector, the financial sector, as well as the generic sector. By generic sector, we mean every sector that does not have a sector code that has been approved and gazetted by the Minister of Trade, Industry and Competition. And you'll recall that in respect of mining, mining has got a mining charter, which is not a sector code. So all the mining companies are measured using the generic scorecard because they do not have a specific sector code that has been gazetted. So I just want to clarify that. Now, of the 95 transactions that we've looked at, only 70% were registered. The 25 transactions were rejected outright because they couldn't comply with the basic requirements for the filing. Some of them did not even have the basic documents such as the shareholders agreements, so that we can test what powers are coming with the percentage of shareholding. And some did not even have a basic document of a sale of agreement. So then you start wondering, what sort of arrangement is this where there isn't any legal document that is going to govern how things are going to be? So we've rejected those outright, and the entities have an opportunity to resubmit them once they've corrected them. And now, in terms of the funding mechanisms that we have found in these transactions, we found that a whole lot of these transactions are funded through a vendor financing mechanism. This means they are funded by the entities, those corporates who are entering into a sale of equity to Black people are the ones that are also financing it. So they give a loan to a Black person for a Black person to buy a stake in the entity. Although that loan does not necessarily come about in terms of a physical transfer of cash into the bank account of a Black person for them to buy it, but there are agreements that are entered into that show that that particular transaction has been vendor financed. So of these transactions, about 32% of them are vendor financed. And the banks account for about 16% of the financing of those transactions. And when we looked at the involvement of government institutions, like funding institutions like your IDCs, your NEF, and all of those in regards to these transactions, we found that government only funded 4.2% of those 95 transactions. So government still remains the lowest in terms of funding for BBBEE transactions. And so what we have said as the Commission is that it is important for government to step up its ability to finance and fund Black people, because when Black people do not have finance, they are subjected to a number of restrictions that if the Commission doesn't pick them up, their participation in these particular deals might actually just not make an impact if they do not have the level of control that needs to come with it. So when a transaction is funded by the entity where you are buying a stake, at times they're inclined to want to restrict how you participate. So it is for this reason that the Commission assesses these transactions to ensure that those restrictions are removed. But we are afraid that in some of the transactions that do not find their way to the Commission, we might have Black people still taken for a ride. So now, in conclusion, in regards to the transactions, I would like to also highlight that of these transactions, for the year that I'm talking about, this is the last financial year, agriculture as well as tourism did not have any registered BBBEE ownership deals. So meaning that maybe there are deals that they've entered into, but they are maybe below 25 million and therefore we have not seen them, or they have not engaged in any ownership deals, and which would then reflect onto their overall performance on BBBEE. And we'll see that when we get to the national status, the summary of the national status that I will deal with now. I just want to then stop in regards to the major BBBEE transactions by saying that, yes, of course, we are seeing some activity around it, but we do not think that it is enough when we look at where we are as a country and where we should be going. We expect to see a whole lot of activity, but we are also mindful that the COVID-19 pandemic might slow down economic activity in this year and the coming year. However, we want to encourage entities to still comply with their BBBEE requirements and obligations, and even if the percentage of their contribution is reduced, but we encourage them to continue doing that despite the pandemic that has befallen us as the country and the world. Now I'm going to quickly move into the national status report. The national status report now does not look only at ownership. It looks at all of the elements. So the elements that we measure from a BBBEE perspective, we measure ownership. So that is the extent to which Black people own the economy in this country. And then we then look at also what we call management control. Management control tests the extent to which Black people are represented in decision-making structures. So it looks at management from the junior management up until the top management, which is at the board level. And then the third element that we measure is around skills development. So as we are aware, Black people were deliberately excluded from accessing knowledge, education, as well as information, especially around areas that are considered to be scarce skills. So Black people were excluded from that. So the skills development element is intended to ensure that Black people are empowered so that they've got the skills to participate meaningfully in the economy. The fourth element is the enterprise and supply development. We all know that because Black people were excluded, the markets are still very, very prohibitive. We still have high barriers to entry. Black people, even when they start their businesses, they battle to penetrate the markets. They battle to find people to supply. They even battle just to get on the database of particular entities to provide services. So now the enterprise and supply development element is intended to empower the upcoming entrepreneurs, Black entrepreneurs, but also to move them into the supply chain. And once they're in the supply chain, to give them work and make sure that they are able to sustain themselves as a supplier to the various measured entities. And this is particularly important to make sure that Black people can run businesses meaningfully without exclusions. The last one is the socio-economic development. This is anything that any measured entity would be doing to make sure that they help Black people to be in a position to operate within the economy and be meaningful in terms of their impact. So now, when we look at the compliance reports on an annual basis, we receive the reports from all of those JSE listed companies, organs of state, and public entities, and the SETAs. And in the last calendar year, because on the compliance reports we use the calendar year. On major BE transactions, we use the financial year. So in terms of the last calendar year, that is the year ending in December, what we have found is that the JSE listed companies that we counted that were supposed to report to the Commission were 356. However, we received only 150 reports. We have now engaged the JSE in respect of the level of non-compliance by the JSE listed entities. And also we will be enforcing, we will take action against those entities that have not submitted, because it's been now, this is the third year that they were expected to report, and 150 is not a good number. And we are not able to measure the country's performance properly without these reports. Now, in terms of the organs of state and public entities and the SITAs included, we only have 15% of them that have reported. So the reporting trend in there is significantly low, and we are very concerned. So both from a private sector perspective and the public sector perspective, we are worried about the level of compliance around reporting. Also with the organs of state, we will be taking action now, because again, even for them, it was the third year that they were expected to report. We think that we've done enough awareness, we've done enough reminders, and now we can see that the action is now deliberate, which means that we must invoke the enforcement provisions to deal with it. Now, of the reports that we've received, I just want to indicate that from a perspective of ownership, overall in this country, Black people seemingly account for only 29% of ownership of this economy overall. So you look at all of the sectors. So on average, 29%. This was a slight move, an increase from 25% last year. But that should not also give us comfort, because in 2016, when we did the benchmark study, Black people were at least around 32%. So we have regressed. And so any small increase with 2% or 3% is not making any impact, considering where we are and considering that we are like 25 years after the attainment of democracy. So we need to accelerate that. In respect of management control, the overall figure tells us that Black people only account for around 38 to 39% of representation on the boards, as well as on the senior management structures. So what we find is that even though there's some improvements, even if it can be 1% there and there, but Black people still continue to remain in the majority in regards to junior management and middle management. But when you go to senior management and top management, that corporate veil and that glass ceiling is not being pierced. So we are concerned about that overall statistic. But then in terms of the skills development, we have found that, let me just say it like this, in skills development, enterprise development, as well as socio-economic development, on those three elements, overall, companies did not improve, they actually regressed. So on skills development, you'll see that overall, we only have companies contributing 49% of the targets. And on skills development, we know what the target is. All measured entities are required to spend 6% of their payroll to empower Black people through bursary schemes, through learnerships and all of that. And in this case, companies only spent 49% of the targets that they were supposed to spend. And in terms of the enterprise and supply development, in terms of the overall, they are performing at around only 51% of what they're supposed to spend. So under enterprise and supply development, entities, measured entities are supposed to spend 3% of their net profit after tax in terms of providing mentorship, providing supply development initiatives to Black entrepreneurs to make sure that they're sustainable in the economy. And they get recognition for that. For every contribution they make, they get recognition for that. And then finally, in terms of socio-economic development, which is ordinarily, people do score full points on this. But this time around in this year, companies have only obtained around 60% in terms of their performance. So now, when you look at that and you look at overall, the entities that had between BBBEE level 1 to 4 have also declined, in a sense that we have only around I think it was 33% of the organs of state and 49% of the JSE listed companies. So those are the entities that have got about from between level 1 and level 4. And then in terms of the ones that are falling in terms of level 5 and non-compliant, we found that more and more entities have fallen into that category, and some have fallen into a non-compliant status. And which should be a concern, because when they fall into a non-compliant status, it means that they should not be able to maintain their licenses with government. They should not be able to do business with government. They should not be getting any tenders from government. And this is the part that we'll be monitoring to make sure that it actually happens. So that is the summary in terms of the overall BBBEE status. So now, if you look back at the EAP, you'll see, just for instance, on Black ownership, if we have got only black people owning 29% of the economy, when they account for over 80% of the population, then we've got a problem. So it is a problem that needs to be accelerated, and it's not a problem that is going to require only the Commission to oversee it or to encourage people to do it. It's going to require the measured entities themselves, which is the private sector and government, to play their role. And we're going to also require the civil society as well as the labor in terms of unions that are representing employees, because there's a lot of abuse around worker schemes, which we have picked up and we are worried about. As I conclude, facilitator, and I know I'm mindful of time, but I must indicate that in terms of the complaints that we receive around fronting practices and misrepresentation, we find that the mining, construction, as well as transport, and in the last year, we saw the emergence of the ICT sector. They account for the majority of the complaints around fronting. And we want to encourage the entities in those to look and introspect, because these kinds of complaints, they're an indication that there's a problem in terms of how BBBEE is implemented. And even if we have not picked you up at the moment as a culprit, it is an opportunity for you to correct behavior. And as I said, we provide free advice. Do come to us proactively. We'll assess your scheme without any charge and tell you whether your scheme is compliant or not. And I would like to stop at that, and I will be available throughout the session if there's any information that I need to clarify or any question that I need to respond to. Thank you very much, facilitator. I cannot hear you. I think you are muted. I cannot hear you.
We can't hear you, facilitator. I think you have
muted.
Yes.
Yeah, I was trying to explain that. We can't hear you.
You're unmuted.
We didn't hear you. Yes.
We can't hear you at all.
We can't.
Speak through my mic. I will put you on my.
Can you hear me, colleague?
Yes, I can hear you now.
Okay, thank you so much for. It was informative, but also shocking that after 25 years or 26 years of a democracy, we are still far behind in addressing issues of vision. But without a waste of time, I will take the second panelist who will talk about the role that the development finance institution can play in the country. Then from there, we can take questions and input from participants. Over to you, Dr. Nthabiseng.
Thank you so much, Chairperson. Good afternoon to you, Commissioner Ntuli. Good afternoon to all the guests who are here. Thanks, colleagues, for sharing some of your time with us. I'll quickly get into my presentation and share a lot of facts with you. I just want to give an overview. I believe that South Africa's economic state requires that we look at development finance institutions in a different way and use them in a way that drives this transformation that we've just heard about, which is not happening. We are sitting in a situation where we are seeing very low growth. My computer seems to have frozen. We're sitting in a situation where we're seeing very low growth. We are sitting in a situation where we are not only seeing low growth, but we're also seeing high level of unemployment, which is the worst we have seen to date, post-1994. And we're also sitting in a situation where we are seeing widening levels of inequality. So these are all problems that are needing decisive response from an economic perspective. And I don't believe that we have seen a concise economic plan strategy that our country is implementing in this time of crises that is going to change the narrative and what is happening right now. So I'm going to go into the presentation now. What I'm going to cover is just a state of the economy. I'm going to look at DFIs and how they can be used. And I'm also going to look at a few case studies and compare with Asian economies. My presentation seems to have frozen, and I don't know why it's not going. Can you guys see my presentation?
It's not projecting.
Oh, it's not. Stop. I'm just going to stop. Let me talk to it. It's fine if it's not projecting. Why is it not allowing me to project? This is just weird. So the first point that I want to make is that the economic situation requires that we respond accordingly. One, South Africa's growth rate, I was going to show you a slide that basically reveals that the growth rate in the country is literally sitting at 1%. Where we are right now is negative. I think we've seen the contraction in the last quarter of more than 51.1%. But prior to that, if you just look at the annualized growth rate, our target for this year was 0.7. Our targeted growth rate for the country is less than 1%. This is prior to COVID. This is serious crisis. Why it's a crisis is that you can't have, with an unemployment level of 31%, and this is the narrow definition. Let me talk to unemployment. Unemployment, narrow definition, you're sitting with unemployment levels hitting as high as 60% for the youth, and I was going to show you a slide that just proves that. But the point that we are seeing in the country, in South Africa right now, is that we are seeing that clearly whatever the economic policies that are being implemented, whatever the economic actions that are being taken, they're not resulting in growth outcomes. So we're seeing this 1% growth target. Over the last 10 years, on average, our growth is around 1.2%. Depending on which economic policy you look at, 2.8%, 3%. The highest we've had in terms of growth on average with economic policies is GEAR. I mean, sorry, it's not GEAR. I must be correct today. It's ASGISA. ASGISA had the highest growth rate at 3.5% during its time. Its targeted growth was around 5.5%. And we have not seen that type of growth after ASGISA. Even the new growth path, the new NGPs had the lowest levels of growth with 1.2 average percent growth. So what we are seeing is very poor growth in South Africa. And as a result of the poor growth, it's because of the economic policies and the structure of the economy. The next point that I want to go into is the issue of our poverty rate. We're sitting with more than half of our population living in poverty. We also have the worst inequality in the world. So we're seeing in South Africa, if you look at Stats SA, we're seeing 40%, the bottom 40% of our people only earn 8% of our income. And the top 10% are literally sitting with 80%, more than 3/4 of the wealth of this country. And the question that we have to ask ourselves is why this is. Again, it points to some of the structural constraints, the mineral energy complex, and other factors that predominantly contribute to the result. And one of the key things we need to look at is what is happening with our finance, our capital, what is happening with our institutions that are tailored towards reviving economic sectors, boosting growth, productivity, and the like. And how are those assisting us in this regard? Are they assisting us? I think we need to ask that question and look at the results and then ask that question, answer that question. The next point that I would want to add is look at the South African per capita GDP. I've done a comparison over time of per capita GDP with other emerging markets and South Africa. And our per capita GDP is where we were in 1994. That means that the economic health of the country is worse. If you look at us compared to China, compared to India, Turkey, Ghana, and even Brazil, we're faring far worse in terms of per capita growth year on year. And we're seeing contraction. So our quality of life is not improving for the majority of South Africans. And that's a fact. And then we're seeing gross fixed capital formation, which is just telling you how much reinvestment comes from our private sector, reinvesting into capital, machinery, equipment, and the like. And we're seeing here South Africa sitting at 17.9% in relation to GDP. You think that's big, it's not. In fact, reinvestment levels for China, for your other emerging market economies are sitting at 40. In terms of percent, they are sitting at over 30% level in relation to GDP. But in terms of rand billion, it's more than triple what we are investing into our economy in terms of scale. So, and you can imagine the quantum we're talking when you compare with China, when you compare with Turkey, and you compare with other emerging markets, we are faring worse. And lastly, in terms of economic sectors, our economic sectors, the bulk of our growth comes from a services economy. We're a services-driven economy. We used to be an industrial-driven economy. We still suffer from what is called the mineral energy complex. Even our finance or investment growth path is really related to that. And what we've seen over the last 50 years in South Africa is that our primary sector, which is agriculture, quarrying, mining, has really lessened. We're contributing less than 5%. Agriculture's contribution in terms of total output. If you add manufacturing, we're deindustrializing. It's slightly gone up in the 40s, 50s, 60s, and this is because of decisive interventions that wanted to see increase in this variable, so that you have a manufacturing sector, which is tooling, your tooling and also your foundries, which is a South African product that was developed through industrial finance. And this didn't just happen. It was an effort of policy, trade policy, and decisive intervention around financing so that you could actually have capacity in this regard. Energy was one of the outcomes as well. Decisiveness was taken that we need energy to produce growth, and energy was one of the key pillars in this regard. However, what we've seen over the last 20 years is that the services sector has grown supersedingly above all the other subsectors of the economy. And this is a result of the type of structure and not supporting adequately the primary sector and also the secondary sector. I want to add that also the lack of entry of new economic entrants, particularly Black-owned SMMEs, into these subsectors is because there are constraints, is because there are barriers to entry that need to be lifted. And this is where development finance institutions really come in, because they assist in terms of dealing with barriers to entry, dealing with issues of price, dealing with issues of risk that other institutions wouldn't deal with. So let's just get into the issue of development finance and why it's important. You need to understand that with development finance, there has to be a problem. There's a reason why you need DFIs. You don't just establish a development finance institution for the sake of it. Most countries set them up. Either they develop in banks, you can call them what you want. Ours are called Industrial Development Corporation, National Empowerment Fund. There's various others that service smaller enterprises, but all of them are primarily solving a problem in the market, which the private markets or markets are not able to solve without the state intervening. And there has to be an admission that there's a market failure. Because of that market failure, then you have to have industries that are created, or rather development finance institutions that meet the needs, the capital needs of industry that your private sector is not able to meet. Okay, so we go into the issue of the real reason for the need. The history of DFIs in South Africa goes as far back as 1940s with the IDC. The real reason why it was set up was to industrialize South Africa. There was a clear mandate, there was a clear intent by the then Afrikaner nationalists that were in control of the country. They set up foundries, they set up ISCO, they wanted to develop minerals. They beneficiated those minerals and set up tooling in line with that, and they needed cheap finance so that they could establish these industries. The question we must ask ourselves now is, what are we trying to set up with our DFIs? What exactly is the intent? With our SMME strategies, what subsectors or what key economic sectors are we trying to thrust the majority of our excluded Black economic entrants into? And I think we need to clarify that. The other thing I want to talk to about historical DFIs, there's an issue of efficiency versus equity. So pre-94, post-94. Post-94, there was a focus on efficiency, i.e. generating profit, maximizing profit, making sure that your non-performing loans are obviously at a minimum level, which is necessary so that you have a sustainable institution. However, prior to 94, massive risk was taken by most of our DFIs. They were willing to take on risk, not to say these ones are not, but the focus on efficiency versus equity, there's a balance card there. There's I'd say, a trade-off. And I think it's something that needs to be dealt with, that a lot of the risk that the private sector is not willing to take should be taken on by the state. And it's a question of, are the products actually speaking to that and speaking to the needs of the entrepreneurs on the ground? The capacity of the state is another key aspect. DFIs are linked primarily to the capacity, capabilities of the state in terms of planning, execution, implementation of its own plans and programs. We can't leave that out. So the ability of a blended finance, for instance. So a lot of tools that the DFIs are offering now are blended finance packages where you get a grant from one of the DTI incentives mixed with the financing from one of the DFIs, which would then would be a combined financing for your business startup or a continuation or even a merger or an acquisition of an existing business. These are supposed to be done by the state, but if the state is inefficient, i.e. one of the departments is inefficient, or there's lack of capacity, or there's poor administration, or there's non-performance in terms of oversight, these then make DFIs ineffective primarily. And the cost of the loan becomes not only equal, but even becomes more than your normal private entities. So you need to look at that. And then I want to just add the other aspect that talks to, can we say our DFIs are developmental? For this to be answered, we can't answer it here, but I think the things that we need to look at is the issue of price. If the interest rates offered by DFIs is not only equal to the markets, but more, and they're more expensive, this defeats the purpose of what is known as cheap finance. If DFIs are not able to offer the type of products that the targeted market needs, again, we need to assess each DFI individually in this regard. If the DFIs don't have targeted beneficiaries that they are looking at. So you must remember, along the entrepreneurial space, as was mentioned by Commissioner Ntuli, you have JSE listed companies, you have medium-sized companies, you have small companies, and you have micro companies who are hiring and employing 3 up to 5 employees. Others are up to 50, others 100, others thousands. Each product must speak to those type of SMMEs. Each scale of size of business has different needs and a different type of product and different risk level for each. And you've got to have suited products that meet all of those. And there's a lot of critique, if you read a lot of the papers written about assessing the DFIs for each of the different institutions and whether or not they are targeting their relevant beneficiaries with the right type of products, pricing them accordingly. And I think that this is a key issue. And then lastly, looking at the risk appetite. If the risk appetite of the DFIs isn't necessarily more than the bank, more than the banks, so to speak, the commercial banks, where there's a market failure and that they're not willing to take the risk of these necessarily new entrants who don't have collateral. So I want to just make a relevant example right now. We're seeing the government give 200 billion in loan guarantees to commercial banks in the main. What would happen if the same type of support was given to development finance institutions? So Black-owned businesses in the main were able to get that type of support, because we've heard the minister herself say in public that 75% of the beneficiaries of the loan guarantee scheme during COVID is white companies, white-owned companies. But the reason why we have unemployment, the reason why we have high level of poverty, the reason why we have inequality is because we have been unable to incorporate the large masses of the existing excluded new Black-owned businesses into some of these key subsectors. But I think we need to also look at creating new industries. So DFIs come in the gap where the private sector who want to recover their costs, and on the other extreme end, you have government who are providing you with public funds and fiscal transfers and mainly grants, but they don't necessarily look at cost recovery. But in the middle somewhere lies a niche whereby finance institutions want to recover costs, but they also want to have development impact. They also want to have socioeconomic impact. And so therein lie the gap where DFIs actually meet that gap, where they do have cost recovery, they do take on a certain level of risk, somewhere in the middle between private sector and also the state. But what the problem is when the DFIs try to become like the private sector and behave like the private sector, but at the same time, they malfunction in terms of administration like the public sector and sometimes, and public goods, and thereby miss the point of their mandate and are becoming inefficient in a sense. So there has to be a balance of cost recovery, of taking on high level of risk, but also meeting the needs of the market. We need to optimize our goals. I think the last point that I want to add is that we must recapitalize our DFIs if we're serious about economic growth. We need to look at using pension funds, particularly, I believe, looking at how we can recapitalize our DFIs and how we can use structured investments. And there's a whole list of ways you can do this without prescribing assets. But I think that it's in infrastructure asset allocation, which has really been on the cards in the last few months, but also looking at SMME support and SMME finance through existing entities that have a record and a history of being well managed, good governance systems in place, and not throwing money into badly managed institutions where you won't get returns. But I think that we must review and revisit recapitalizing DFIs if we want to see some of the numbers that have been mentioned now that are startling about the performance of our economy in terms of incorporating Black people in the mainstream economy. If you compare South Africa's case studies, I looked at the Land Bank. Land Bank was set up in 1912. It mainly finances farmers. It historically was funded by National Treasury, just for your information, through debentures and promissory notes. However, in 94, they actually set up a Strauss Commission that determined the level of rural finance and how it would be financed. But there's a lot of complaints about Land Bank in that it's actually still financing its historical, primarily white commercial farmers, and it's not assisting the new entrants even now. One would have to assess that. I don't know what the studies are, but I just cited one or two studies that speak to this. Same with IDC. IDC is another industrial development corporation that has been set up in the 1940s, primarily to finance South Africa's manufacturing, primarily to finance our energy transition and mineral resource beneficiation. This was its intent. The intent was also supporting import replacement and ensure that high-tech industries could be developed. This was before 94. 94 came, we maintained it. It didn't become like a Black National Empowerment Fund targeting Black-owned investment, though it does target BBBEE as a component, but there's still uneven distribution in terms of allocation provincially and also to the type of industries. We're still finding the investment pathways are really dependent on the mineral energy complex, i.e. they're still going to mining, highly financialized sectors and the like. So traditional old sectors that finance and very little movement into the new. DBSA, which was set up in 1983, is another example of a DFI. It's self-financing. It uses a variety of interesting products of guarantees around equity, venture products, and also partnerships with a lot of global international financial institutions to raise its balance sheet and raise capital. And some of the infrastructure funds are housed there now that are driving some of the massive global growth, or rather, let me say, continental growth on infrastructure. I don't have time to assess them. I don't have time to look at the financials, the balance sheets. I mean, you need a lot of time to do that. But I think that when I compare the South African case studies to the Asian tigers, I see that one, Korea, China, Singapore, and some of the late entrants to the Asian tigers, those countries, when they applied DFIs, before they used the DFIs, they had a clear economic strategy. They had a clear target of growing their share of manufacturing. They had a clear target of growing agricultural productivity and restructuring the composition of their sectors. It is also very clear to us that unless you have a clear economic strategy, your DFIs are not necessarily going to be very useful. The other thing is that the DFIs support your economic strategy, your economic goal. So you must clarify what you're trying to achieve first, so that you can use the DFIs, recapitalize them in line with that, and target other supporting interventions in this regard. Two, I give the example of the Development Bank of Singapore. They targeted 4 strategic sectors in manufacturing only. They targeted chemicals, electrical equipment and appliances, shipbuilding, repairs, and metal engineering. They were clear, this is what we're targeting. They had reasons for that. They wanted to increase their sectoral composition of manufacturing. They wanted to improve their export, what we call export promotion. Their growth path was their value of exports as a percentage of GDP. And they knew that this is what would drive it up if they then focused on these subsectors, because they wanted to become leaders of high-tech value goods, which they are now, by the way. We see it with the LGs in Taiwan, Korea, in China. You see it with the Lenovo. These products didn't exist before they actually focused on these subsectors, put the DFIs there to support the value of the development of electrical equipment and appliances and high-value goods. You see it with, what is this product? There's products that we buy, Kia, all these products that we now buy that didn't exist before. And you see outcomes of products that were not necessarily in existence. The export promotion, the fiscal incentives, and the industrial estates were part and parcel of what came with the DFI. A DFI on its own will not necessarily succeed. There are other trade policy, fiscal policies, incentives that are usually coupled with them that enable the growth of enterprises, because that's primarily what you want. You want to grow subsectors, you want to grow enterprises, you want to grow industry, you want to create. What the Asian Tigers have done is that they wanted to create national champions. They knew that they were trying to create an LG. They knew that they were trying to create a plastic corporation that would become a multinational. They knew that they were targeting these phones that we are buying now, Huawei. Another example is, I can't remember off the top of my head, but there's so many of their type of products. Oh, the other example is the Formosa Plastic Corporation. They knew that they want to become a multinational, a global plastic corporation, so they funded it. What do? Production subsidy, because the inputs of energy are very expensive for any type of manufacturer, so you need to look at the input costs. They also had an import tariff protection to protect their local market. We are not clear in South Africa about imports. We are not clear in terms of our trade policy. We talk about industrialization, but until we also collaborate with our trade policy and ensure that our inputs, our products actually have a chance to make it. And I mean, there's a lot of discussion around infant industry protection, our entry into GATT, or what was now the General Agreement on Trade and Tariffs, and our entry into WTO, and then where we are now in terms of our ability to deal with cheap imports coming in from China, from Brazil, and all these other sectors that are killing our local producers. What they then did was they had import tariff protection, they had production subsidies, they funded their enterprises through these DFIs, and they also had direct public ownership, especially at inception. These goods were owned by the state. Then the private sector came in later. Why? Because their goal was not necessarily to have maximum profit. They were not maximizing profit. They want to create jobs. They want to create national champions. They want to ensure that a subsector was created and developed, like Cecil, into the next phase. I'm not talking about Cecil where it is now, but previously, before what happened with the fall in the share price and the like, there was success. So I'll stop there, Chairperson. But I believe that there's a lot we can do with DFIs in terms of trying to grow the South African economic outcomes case, and there's a lot we can do in terms of targeted interventions, having a clear economic strategy, so that we can have positive outcomes for the overall economy and transform the economy. But if we don't have a clear economic strategy, if we don't have targeted trade policy aligned with production, aligned with our direct state capacity, we're not going to succeed in this regard. Thanks so much.
Thank you so much. Can you hear me?
Yes.
Okay, thank you so much, Dr. Moleko. I can see a hand from Sipho Matonzela. Sipho, can you pose your question either to Commissioner Ntuli or Dr. Moleko? Mr. Matonzela, your question? Your hand is up, Mr. Matonzela. The question?
He's on mute.
Okay, while you are waiting for Mr. Matonzela, please feel free. Those who are in the webinar, please feel free to engage to questions. Please feel free also to ask questions. There is a hand of Nthabiseng. Nthabiseng, your hand is up. You are also on mute, Nthabiseng.
Greetings, everyone.
Welcome, Nthabiseng, please.
I'm very, very sorry. I was getting ready for work, so I'm a bit late. I didn't have much details of what has been happening and all that has been said, but Mr. Rakolote, as much as you know me, I'm one of those people who actually like to be radical, especially regarding such topics that affect not only myself, but communities, the country, and the nation at large. So there are certain aspects that I would actually like us to discuss and also to go straight to. I'm not much of a question person, but I like to state facts. Hello?
Yes, what are the facts that you wanted to state?
You know, it has been recently been brought to my attention that as much as we are talking about economic transformation and also talking about community developments and everything, it is very unfortunate that most disadvantaged communities are still suffering, even though we've got mines in our communities. We also have councillors, we also have municipalities. It saddens me. It hurts my feelings to actually say that most of our leaders are self-centered. They are more considerate about what they want, what matters to them most. For instances, where I come from, there is a mine in our community, but 90 to 95% of our community members are still underprivileged, and the population is less than 200. And you might find that there is one executive member from the management board who is engaging with the so-called community leaders. Yet that individual doesn't know the community background, doesn't know much about the community. And instead of actually having what do we call them?
Nthabiseng, can you go to the question, please, because we don't have enough time. We don't have enough time. Just
going to the question is that how do we actually engage with mining industry and municipality leaders instead of them engaging with the so-called community leaders? Why don't they elect or select someone from the community industry who knows every single individual from the communities? That way our communities can grow and develop.
Okay, thank you, Nthabiseng. Yeah, the focus today was about economic transformation, focusing closely on the BBBEE and what can be the role of the DFIs in terms of transforming our economy. I don't think the two panelists will be able to answer to your question for now. Mr. Matonzela, your hand was up. Mr. Matonzela?
In the meantime?
Yes, in the meantime, you can come in, Commissioner Ntuli.
Yes, no, I just wanted to, not to respond directly to what Nthabiseng was saying, But just to indicate that in our work, what we have also identified is the community schemes that you find in respect to especially mining communities, where there are trusts that are being established, and these trusts are, are said to be ownership trusts for the communities. What we've picked up in the assessments of some of those trusts when they come to us.
Yeah, now, sorry for that. Now Sipho comes in and make noise. Sorry for that.
Okay, so can I finalize?
You can continue, Commissioner Ntuli.
Yes.
Sorry for that.
So what we do is that when we look at those schemes, we do check how the scheme is structured, and we do check how the community is being represented. So I think it is important for people like Nthabiseng, if they are aware that there was a community scheme that was intended to benefit the community, but they are only specific people that know about it or that are being communicated with, and those people do not communicate with the community itself. They need to raise those things so that we can just look at them carefully, and where there are discrepancies, then we can then get those things to be adjusted. We have dealt with one case of a mining community in Rustenburg, where the employees were made to be 26% owners of the entity, but they were not participating. In fact, the management of the company itself was representing them on the board. How do you represent employees on the board yourself? So they are 26%, they were not in control of it, they were not voting in respect of it, and so forth. So if there is a scheme that the community is aware of that purports to be benefiting them, let them also bring it to our attention so that we can then intervene. Our intervention does not always result in a confrontational approach, but where we can, what we do, the first option that we do is to get to correct the situation so that the community benefits. And where we find resistance, that is when then we will then investigate and refer matters for prosecution.
Thank you so much for your response. I don't know if Sipho, you want to pose a question or you forgot to put your hand down. But let me just welcome you, Sipho, and unmute your mic so that if you've got a question, then you can ask. Sipho?
No, sir, I don't have any question. I was just listening.
Okay, thank you so much, Sipho. Colleagues, other colleagues have got questions?
I don't know.
Colleagues, those who are having questions, please ask questions. In the absence of questions, and panelists, please also feel free to ask questions to each other if you want if you want some clarities to your co-panelists, or please feel free to seek those clarities and make some inputs. In the absence of questions, let me thank the panelists for your time and for your submissions. It was very much informative. And hopefully we can have another session, a follow-up session on this, so that we can invite more of the community members like Nthabiseng to raise their concerns around mine community trust. Also, Dr. Nthabiseng Moleko, thanks for your presentation on DFIs. In future, maybe we should also engage government to be part of these kind of sessions so that they can respond to your proposals and also take note on the suggestions that you bring on the table. Thank you so much, colleagues, for giving us that valuable information. And I really appreciate that you accepted the invite to come be part of this webinar. Thank you so much, and have a lovely afternoon.
Thank you very much.
Thank you.
We really appreciate it.
Thanks, facilitator. Thanks to all.
All right.
Have a good afternoon, everyone.
Bye, Dr. Moleko.
Bye, Commissioner. Bye-bye.